Let's break it down. If you've been seeing headlines about a US dollar collapse, you're not alone. Right now, as we head into 2026, we're watching an unusual mix: record-breaking gold and silver prices, loud warnings about a coming financial shock, and Bitcoin swinging between digital gold, hype, and full-on risk asset behavior. So today, I'm going to separate signal from noise. What's actually driving the dollar anxiety? Why gold and silver have surged? What that does and doesn't mean for Bitcoin, and what to watch in 2026 if you don't want to get played by fear headlines. I'm Imran, a Middle East-based analyst who follows global economics, tech, and politics. My goal is to give you short, honest breakdowns so you can make up your own mind. First, let's address the big scary phrase, dollar collapse. A true dollar collapse would mean a rapid loss of confidence where global investors refuse to hold dollars, US. Borrowing costs spike, and the US struggles to fund itself without printing. In real life, it would show up as things like failed treasury auctions, emergency interventions, sudden capital controls, and a fast, disorderly surge in import prices. That's an extreme scenario, and it's not something that happens quietly or overnight without clear triggers. What we are seeing right now is more like dollar stress. Growing worry about debt, deficits, and policy credibility, mixed with a very real global shift toward diversifying away from the dollar at the margins. Even the IMF's reserve data shows the dollar's share of allocated reserves sitting in the mid-50% range in 2025. That's still dominance, but it's not the unchallenged 70% plus era. And the US Federal Reserve has also documented the same big picture. The dollar remains number one by far, but the long-run peak is behind us. Important nuance. Some of the quarterly moves in the dollar's reserve share are also affected by exchange rates. In other words, the share can fall on paper partly because other currencies rose versus the dollar. So don't let one quarter become your whole world view. So the story isn't the dollar is dead. The story is the dollar is still king, but the crown feels heavier. Now, why are gold and silver exploding? Because gold is basically a referendum on three things: real interest rates, trust in policy, and geopolitical fear. In late December 2025, Reuters reported gold hitting fresh all-time highs above $4,500 per ounce and silver hitting record highs in the high 70s. That's not normal price action. That's a market screaming, "I want protection." And it's not just retail investors. Central banks have been a major part of the gold bid for a few years now. The World Gold Council's research shows central banks keep gold for diversification and risk management, and those motivations have been strengthening, not weakening. Now add one more ingredient: the rate cut narrative. When markets believe the Federal Reserve will cut rates, the opportunity cost of holding gold goes down. Gold doesn't pay interest. So lower rates, or expectations of lower rates, can boost demand for gold and silver. That's why big banks are now publishing eye-popping forecasts. Reuters reported Goldman Sachs projecting gold could reach about $4,900 by December 2026. Deutsche Bank has also talked about gold approaching $5,000 in 2026 and potentially moving beyond that later. And silver? Silver is the wild cousin. It moves like a precious metal when fear rises, but it also has strong industrial demand. That means silver can outperform dramatically in a metals bull market, then crash harder when the cycle turns. So when you hear silver will surge, remember, it's not just a store of value story, it's also a manufacturing and supply story. So when you put these pieces together, debt anxiety, geopolitical risk, central bank diversification, and rate cut expectations, you get a powerful cocktail for precious metals. Now comes the next leap people make. If gold and silver are mooning, Bitcoin will explode too. Sometimes yes, sometimes no. Here's the honest view. Bitcoin has two personalities. Personality 1 is anti-fiat hedge. This is the narrative. Limited supply, no central bank, portable value outside the system. Personality 2 is liquidity rocket. When financial conditions are easy and risk appetite is strong, Bitcoin can pump like a tech stock on steroids. And when the world panics, especially in a sudden shock, Bitcoin can dump hard because leverage gets unwound and people sell what they can. So Bitcoin doesn't automatically rise in a crisis. It depends on the type of crisis. If it's a slow burn confidence problem where people gradually want alternatives, Bitcoin can benefit. If it's a fast liquidation event where cash is king, Bitcoin can get hit first. Now, we did see Bitcoin hit a new all-time high around $126,000 back in October 2025 in some reporting. So the idea that Bitcoin can surge in a weak dollar easing policy environment is not crazy, but Bitcoin also has a history of violent drawdowns even inside bull cycles. It can be both future money and high beta casino depending on the week. So what's the smartest way to think about 2026? Don't predict collapse. Watch for conditions. Here are the 5 signals that matter more than any headline. Signal 1. The bond market. If US long-term yields spike because buyers demand higher compensation to hold treasuries. That's real stress, not Twitter drama, real stress. Signal 2. The Federal Reserve path. If cuts come with stable inflation, that's supportive for risk assets. If cuts come because growth breaks and unemployment jumps, that can be a risk-off shock first, then a liquidity rebound later. Signal 3. Central bank behavior. If central banks keep adding gold and talking openly about diversification, that reinforces the trust hedge thesis behind the metals move. Signal 4. The dollar in global trade and reserves. The dollar doesn't need to go to zero for the world to change. If its share keeps slowly declining while alternatives grow, that's structural, slow but meaningful. Signal 5. Crypto market plumbing. In 2026, Bitcoin's direction will also depend on the boring stuff: regulation, ETF flows, leverage, and whether big institutions treat it as a core allocation or just a trade. Now let's map 3 realistic 2026 scenarios. Scenario A. Soft cooling. Inflation behaves, growth slows but doesn't break, rates drift lower. In that world, gold can stay strong and Bitcoin can rally because liquidity improves. Scenario B, hard scare. Something snaps, credit stress, recession fear, or a sudden risk-off event. In that world, gold tends to look good first, and Bitcoin may drop first, then recover later as policy support returns. Scenario C, sideways chaos. No collapse, no boom, just political fights, sticky prices, and volatile markets. In that world, you'll see sharp rotations. Gold up, Bitcoin up, then both down, and everyone arguing online like it proves a prophecy. Before we wrap, here's my quick red flag, green flag list for the dollar narrative. Red flags: a sustained jump in long-dated treasury yields that isn't explained by growth, visible stress in short-term funding markets, and repeated signs that foreign demand for US bonds is weakening at auctions. If you ever hear language like disorderly market from policymakers, that's when the story changes. Green flags. Inflation continues to cool without a deep recession. US growth stays resilient, and the Fed cuts gradually instead of in panic mode. In that world, the dollar can weaken a bit, metals can stay elevated, and Bitcoin can still do well without any collapse. Practical reminder: most people get hurt not by being wrong, but by being overconfident. So, my takeaway is simple: don't get hypnotized by doom headlines. Use them as a prompt to look at the dashboard. If you want a clean framework, gold is your trust hedge. Silver is the high-octane version of that hedge. Bitcoin is your volatility hedge with upside. And the dollar is still the operating system of global finance, even if people are slowly installing alternatives. Let me know what you think. Do you see 2026 as a crisis year, or just another year of big swings and louder narratives? If this helped, please subscribe, like the video, and share it with someone who's getting panic-baited by collapse. Headlines.